When you first step into the world of investing, it often feels like you've wandered into a grand marketplace where everyone else seems to know exactly what they're doing, while you stand at the entrance wondering whether you even belong there. I've met countless beginners over the past 2 decades, and the one thing they all shared wasn't intelligence, talent, or financial background. It was a quiet fear of making a mistake so big that it would confirm their suspicion that they weren't meant for this. The truth, whispered gently from someone who has lost more money than he cares to admit and earned more than he ever expected, is that every investor starts from that same trembling threshold. Investing is not a game of predicting the future. It is a lifelong practice of understanding yourself, your habits, and your relationship with uncertainty. When I talk to beginners, I don't start with charts or jargon. I start with a simple image. Imagine you are planting a small tree. You don't yank the seedling every day to check its roots. You don't panic when the sun hides behind clouds. You nurture it patiently, you give it room to grow, and you trust that time more than your own brilliance does most of the work. The problem today is that new investors live in a storm of noise. Markets move fast, influencers shout louder than reason, and the temptation of overnight wealth shines like a dangerous lighthouse pulling ships toward the rocks. You see someone online claiming they doubled their money in a week, and suddenly your slow-growing sapling feels like an embarrassment. But here is the secret I wish someone had told me at the beginning. Wealth that arrives too fast has a habit of leaving even faster. The foundation of investing is not speed, it's discipline. You begin not by choosing assets, but by choosing a mindset. The first mindset is humility. No matter how smart you are, the market is bigger, older, and wiser than you. It does not reward arrogance, but it does reward consistency. The second mindset is patience. Patience isn't passive. It is an active decision to stay the course even when your emotions begin to riot. And the third mindset is responsibility, because once you invest, you are no longer just spending money, you are assigning it a job and expecting it to work for your future self. With these mindsets in place, we can take the first gentle steps into understanding what investing actually is. At its core, investing is simply using your money to buy something that has the potential to grow in value or generate income over time. It might be a business through stocks, a property through real estate, or even a government through bonds. Each investment is a tiny partnership between you and the world, a handshake that says, I believe in your future, and I'm willing to commit my resources to it. Many beginners mistakenly think they need a lot of money to start, but the truth is, investing is less about the size of your capital and more about the size of your habit. A person who invests small, steady amounts for years will almost always outperform someone who throws in a large sum sporadically. Time is the great equalizer, and compounding the quiet miracle of money earning money turns even the smallest contributions into surprisingly large outcomes if given enough years. Still, before you invest a single dollar, you must understand risk. Risk is not the enemy. Unmanaged risk is. Every investment carries uncertainty, and your job is not to eliminate it, but to choose the level of uncertainty that matches your temperament and your goals. When I was younger, I chased high-risk opportunities because I thought courage meant saying yes to everything that glittered. What I learned often painfully is that real courage is knowing when to walk away. Investing is much more like steering a ship than riding a roller coaster. You control the direction. You adjust your sails. You prepare for storms, because storms always come. With this perspective, let's talk about the simplest and most beginner-friendly form of investing: broad market index funds. These funds allow you to own a tiny slice of hundreds of companies at once, spreading your risk like a farmer planting many seeds instead of betting his entire harvest on one crop. They grow slowly, steadily, almost boringly. But boring is a quality I have come to love deeply in my portfolio. Boring keeps you wealthy. Exciting often makes you broke. But of course, beginners don't always want boring. They come with questions about crypto, about startups, about timing the market, about finding the next big thing. And I don't dismiss these interests. Innovation is thrilling and sometimes life-changing. What I do, though, is remind them that speculative investments should be treated like seasoning in a dish. A little may enhance the flavor, but too much will ruin the meal. Your investment foundation must be built on stability before you indulge in possibility. Another lesson every beginner must confront is emotional control. Markets rise and fall like tides, and your emotions will rise and fall with them if you're not careful. Fear will whisper that you should sell everything when prices drop. Greed will whisper that you should buy more than you can afford when prices rise. Maturity in investing comes when you learn to hear these voices without obeying them. I've seen beginners with modest salaries build real wealth because they mastered their emotions. I've also seen wealthy individuals lose fortunes because they never did. The final piece of this first chapter is understanding your why. Investing without a purpose is like driving without a destination. Are you building a retirement cushion? Saving for a home? Seeking financial independence? Once your why is clear, your strategy becomes far easier to design, because every choice must answer one question: does this move me closer to the future I want? And as we prepare to transition into the deeper layers of this guide, I want you to remember one thing above all. Investing is not about predicting what will happen tomorrow. It is about shaping who you will become decades from now. The beginner who steps forward with humility, patience, and purpose will eventually become the seasoned investor who looks back with gratitude at the moment they decided to take that first small, trembling step into a world that once felt far too large, but ultimately became the place where they finally learn to stand calmly in the face of uncertainty, to trust the quiet mathematics of compounding more than the loud opinions of the crowd, and to honor their long-term plans even when the world around them seemed determined to shake them out of position. Because every investor, whether beginner or veteran, eventually discovers that the real battlefield is not the market itself, but the internal storms of doubt, impatience, and the restless desire to chase shortcuts. As we step deeper into this journey, I want you to imagine that you and I are sitting across from each other at a simple table, maybe with a pot of warm tea between us, and I'm telling you truths I learned not from textbooks, but from scars. There comes a moment in every investor's path when they face what I call the first true test. It happens the first time the market drops sharply after you've invested your hard-earned money. Your chest tightens, your breath shortens, and a quiet voice says, maybe you made a mistake. If you sell in that moment, the market has taught you nothing except how to run. But if you stay, if you breathe through the discomfort and hold your course, that is the day you begin maturing as an investor. Surviving volatility is not about bravery, but about preparation. When your investments match your goals, your time horizon, and your risk tolerance, storms become less frightening because you already expected them. It's the unprepared investor who panics, the one who builds a house of glass and then cries when the wind blows. Preparation gives you calm. Calm gives you clarity. Clarity gives you longevity. Over the years, I've watched countless beginners transform simply by mastering one principle: automate what your emotions would sabotage. Setting up automatic monthly investments, for example, is one of the quietest yet most powerful decisions you will ever make. You remove the burden of choosing the right moment, and what remains is a steady, disciplined flow of contributions that stack on top of each other month after month. When you do this for years, the market's short-term noise melts away, revealing a long-term upward arc that rewards patience more than brilliance. But investing isn't only about money flowing outward. It's also about wisdom flowing inward. You must learn to read not just books, but yourself. Notice your triggers. Notice how you react when prices fall. Notice whether you get overly excited when they rise. Each of these emotional responses is a teacher, and the sooner you learn their lessons, the sooner you will stop being controlled by impulses and start being guided by principles. Now, let's touch on a topic many beginners underestimate: diversification. I like to explain it with a simple story. Imagine you're carrying a basket of fruit across a bustling street. If all the fruit is apples and you trip, you lose everything. But if your basket holds apples, oranges, bananas, and grapes, a stumble is an inconvenience, not a disaster. Diversification doesn't eliminate loss, but it softens the blow. It protects you from uncertainty by ensuring that no single failure can break you. But just as important as diversification is simplification. In a world overflowing with financial instruments, hot tips, and complex strategies, simplicity becomes a superpower. I've met investors who built fortunes using nothing more than 3 index funds and unshakable patience. Meanwhile, I've seen others with complicated portfolios worth millions crumble because they couldn't resist tinkering, adjusting, reacting to every headline. Complexity often masquerades as sophistication, but it is simplicity that quietly compounds into wealth. And still, the temptation of speculation will always whisper to you. Crypto surges, meme stocks spike, a new startup claims to be the future. You might feel the urge to throw your disciplined plan out the window and chase excitement. When that moment comes, and it will, remember this. Speculation is not forbidden, but it must be contained. Treat it like seasoning, not the main dish. Allocate a small, controlled portion of your portfolio to explore these high-risk, high-reward opportunities. But never risk the foundation you have built for the sake of adrenaline. That foundation must be protected at all costs. As we approach the heart of this guide, I want to share a truth that took me half a lifetime to accept. The goal of investing is not to get rich quickly, but to stay rich slowly. Wealth gained through discipline lasts. Wealth gained through luck evaporates. And the investors who thrive long-term are not the ones who make the boldest moves, but the ones who make the wisest ones. As you walk this path, remind yourself often that your future self is waiting for you, waiting for the decisions you make today, waiting for the seeds you plant now, waiting for the patience you practice when everything in you wants to rush. Your investments are not numbers on a screen. They are promises you make to the person you will one day become. And as we bring this journey to its closing arc, let me offer one more piece of seasoned advice. Wealth is not measured by how much you accumulate, but by how much peace you feel when the world shakes. True wealth is the ability to sleep well at night, knowing your plan is sound, your risks are controlled, and your future is aligned with your deepest values. When you reach that point, the market's noise becomes background music, and your life regains a sense of groundedness that no short-term gain could ever provide. So as we conclude this absolute beginner's guide, remember that investing is not a destination, but a lifelong relationship. Treat it with respect, consistency, and patience, and it will take care of you in return. Now, before we part, I'd like to leave you with a gentle invitation. If this lesson stirred something in you, clarity, calmness, or even a new sense of purpose. Now, before we part, I'd like to leave you with a gentle invitation. If this lesson stirred something in you, clarity, calmness, or even a new sense of purpose, feel free to share a comment, a thought, or a reflection. It helps me know that these heartfelt lessons have found their way into your journey. And if you'd like to continue walking alongside me in deeper, longer conversations about finance, investing, and the quiet inner growth of becoming a true investor, consider subscribing or following this channel. Each week, we'll sit down again like old friends over a warm cup of tea and talk about the things the loud market outside never teaches, yet every investor eventually needs to understand.